see your smiling faces. I'm sure you're smiling behind the camera. We're really pleased to be able to host this program, excited to get starting, understanding the tax contributions of Oregon's forest sector. And this is hosted by the Springfield Chamber's Government Issues Committee, really important committee, does some great work for our chamber and our community. We advocate for business by staying informed and engaged, certainly in healthy dialogue at all levels of government, local, state, and federal. Thank you to those local and state elected officials who are joining us. Oregon Representatives Cedric Hayden Boomer Wright, Lane County Commissioners Joe Burney and Jay Bozovich, Douglas County Commissioners Chris Boyce and Tom Kress, and our Springfield Utility Board members David Willis and John DeWinter. We really appreciate that you've chosen to share the time with your constituents from across the state in business and industry. I'd also like to give a quick shout out to my colleagues from the Oregon State Chamber of Commerce. We have executive directors from Pendleton, Salem, Gresham, McMinnville, Eugene Chambers of Commerce, and we've all got our ear to the ground when it comes to critical business and industry policy issues that directly and indirectly impact our local businesses and economies for years to come. So that's why we're here. Briefly, Lane and neighboring Douglas counties are far and away the top 2 timber producing counties in the state, together encompassing over a quarter of the state's annual timber harvest. Over 80% of that timber is harvested from privately owned forest lands. The sector provides over 60,000 family wage jobs in Oregon and 7,000 jobs in Lane County alone that pay on average 130% of our county annual wage. Without question, although the Springfield and Eugene area has a highly diversified economy, the health of the forest sector, both historically and presently, has a direct bearing on our local economies. I'm confident you'll find today's presentation informative. And as Max said, if you have any questions, please submit them through the meeting platform's Q&A function, and our moderator, our staff, and our facilitator, Phil Farrington, who I'll introduce, will communicate them on to our speaker that you'll meet in a moment. So first and foremost, I'd like to introduce John Doty of Citizens Bank and Phil Farrington of CDC Management Company. Both are co-chairs of our Government Issues Committee, and they have a couple of words before we introduce our speaker. Phil and John, let's start with Phil.
Well, thanks everybody for being here. We've got a tremendous response to this program. Over 120 people have registered. We currently have, I think, not quite 100 that have joined, and probably others will be joining us as we go along. We're grateful for this opportunity to present the information to chamber members and policymakers, community leaders, influencers, and others. As a member of the Springfield Chamber Board and Executive Committee, I'm grateful for your participation. I'm going to hand it off for introductions to my co-chair, John Doty. John.
And you need to unmute.
I knew I would do that. Hey, welcome everybody. And I echo Bonnie and Phil's comments. So thank you for being here. Today, we are pleased to welcome Caroline Sully from National Economics and Accounting from Ernst Young to our meeting this morning to present the results from a study that Ernst Young recently completed regarding the total state tax burden on private forest sector in Oregon as a share of the sector's gross value added, or GDP. This study was commissioned by the Oregon Forest and Industries Council, which selected Ernst Young from among a number of leading regional and national economics firms. One of the factors that led OFIC to select Ernst Young was the experience that they, and Mrs. Sully in particular, had in analyzing the impact of diverse state and local taxation programs on businesses, both in Oregon and across the United States. This prior work included a 2020 report commissioned by Oregon Business and Industry to quantify the impact of recently enacted state tax programs on the total tax burden borne by Oregon businesses. Caroline Sully is a senior manager with Ernst Young LLP's Quantitative and Economic Statistics Group. Caroline has over 16 years of experience related to state and local tax policy, public finance, and regional economics. Caroline has a Master of Public Policy degree from the University of Michigan and a bachelor's degree in economics and history from Augustana College. Prior to joining Ernst Young in 2012, Caroline was the Director of Public Policy and Economic Analysis at Anderson Economic Group. Caroline is author of the most recent Ernst Young analysis on business tax burdens by state for the Council on State Taxation. And again, a recent report on the impact of Oregon state tax increases adopted in the 2000 legislative session. Carolyn, thank you for being here, and you have the floor.
Wonderful. Thanks, John. Hi, everyone. I'm really happy to be here with you this morning and to talk about the work that I did looking at Oregon's forest industry and estimating the tax contributions by the industry. So I'm going to share my screen, and I'm just going to take about 15 minutes or so to walk you through the key takeaways of the analysis that myself and my team did. Go through a little bit about our approach and how we do the work to estimate tax contributions by an industry, and then putting that in context in terms of a tax burden measure. And then I'm going to go through some of the more detailed findings just to kind of explain how we did the work, doing some of the benchmarking of the forest sector to other sectors. So that's going to be the plan for today. Okay. So you should be able to see my screen. And I'm going to start off by going through some of the key findings that our analysis found. So the first finding here is that when we start talking about business taxes, often not policymakers, but often I would say sort of lay audiences, people not really familiar with, say, the taxes that a business pays, we tend to think of corporate income taxes only, or just a very narrow set of taxes. And the first finding here is that Oregon's forest sector really pays a variety of local and state taxes. So this includes property taxes, the timber harvest and severance taxes, of course, the corporate excise and income tax, but also gross receipts taxes like the newly enacted corporate activity tax. Pass-through income from businesses is then taxed under the individual income tax. So there's a variety of taxes that the industry pays, in addition to making contributions for fire protection through fire assessments. So we looked at all of the taxes that have been enacted by the legislature, and that also includes a new tax that'll begin in 2022, which is a payroll tax that's split between employers and employees that will fund the state's paid family medical leave program. So since all of these taxes have been enacted, we looked at it in our study. And we looked at all taxes sort of applicable to the forest sector. So that's our first finding. Second, we then estimated business taxes contributed by the forest industry, and we put that in context of, well, what does this mean in terms of the industry's economic activity? And we measure economic activity with gross value added, or GDP, which is just a measure of the goods and services produced in a certain area in a certain time period. So in this case, we are looking at the most recent comprehensive year of data, which is fiscal year 19. And we look at 2019 level of economic activity. And so we take taxes divided by that economic activity to calculate that ratio. And we do that because we want to be able to compare the forest industry to other industries in Oregon. And this is a pretty standard way to do that. And it allows for a variety of comparisons, whether it be between industries or across states, et cetera. So our second finding is that when we did that analysis, we found that the Oregon forest industry's taxes are equivalent to 5.6% of the industry's GDP. And once you add in the fire assessments, that percentage goes up to 6.8%. Now I'm going to pause and explain a little bit too about how we incorporated some of the taxes like the paid family medical leave tax, which is not yet in effect. So because the corporate activity tax was started in 2020 and the paid family medical leave payroll tax starts in 2022, but they were both passed and will be affecting the industry, we looked at these taxes a couple ways. And so here and in the chart on the right, these taxes are shown at full year collections on that 2019 activity base. So in other words, if the taxes had been in effect in 2019, what would the industry, given their financials, what would they have paid in fiscal year 19 for a full year? And that's what we've done here. So we can do an apples to apples comparison. We take, here's what taxes the industry did contribute in 2019. What would they have paid if these two taxes were in effect? And we put them together so we can give you a full picture of the industry's taxation due to the enacted taxes. So the chart on the right shows how the Oregon forest industry compares to a couple other sectors. So looking at Oregon's agricultural and forestry sector as a whole. So the forestry component is part of that Oregon agriculture bar shown here. And then also in general Oregon manufacturing, because we have wood products manufacturing as part of our forest sector. We looked at the entire manufacturing sector. And then finally, we also looked at all Oregon businesses. What is that tax burden statewide? And we do this analysis every year for the state of Oregon as part of our work for the Council on State Taxation, where we do a 50-state tax benchmarking study. And so we readily have that information available. And so, so we've put in that comparison here as well. So as you can see, our finding 3, Oregon's forest sector's tax burdens are greater than other Oregon's industries. So this includes agriculture, which I noted includes forestry, and then also manufacturing. And then the total Oregon business, which you can see here at that 4.4% effective tax rate. And then finally, in addition to looking at, well, what are the tax contributions by the industry and how does that compare to economic activity? We also then looked at what are those tax contributions per acre of private forest land. So the taxes per acre in fiscal year 19, including the CAT and including the paid family medical leave tax, amounts to $15.91 per acre. And that includes the fire assessment portion as well. So everything that the industry's paying on that on that 10.2 million acres of private forest land. So those are our key findings. I'm now going to just spend a minute talking about our approach because I think it's important. So when we do this work, and we do this work pretty regularly for industry clients and for states that really want to understand, what are businesses contributing in terms of taxes? What is that tax burden? How does it compare? So we take a 3-step approach to this analysis. So first is that we have to really spend time doing detailed data collection and estimation. So step 1 is estimating what are the taxes that are paid by the forest industry in Oregon. And we looked at 2 different NAICS sectors, as I mentioned before. So that includes NAICS 113, so the forestry logging sector, and then NAICS 321, which is the wood products manufacturing sector. So then we went about collecting all of the publicly available tax and economic data. So we used data from the state of Oregon and from the various Oregon departments. That included, say, corporate income and excise tax reports by industry. We used in-plan data, which is a modeling system that we use for our economic impact analysis, which has detailed data by sector, really at any geography that we want. So in this case, we looked at it at the state level. We pulled data from the IRS, tax data by industry. So we collected data from a number of sources. And for most of that data, there wasn't specific information related to the 2 subsectors of the forest industry that we were looking at. So we had to go through some exercises to apportion out those taxes and to say, we think this is the best method for apportioning out industry, tax contributions by the forest industry. In our report, we detail exactly what we did for each tax. So I won't go into too much detail here, but we did that process. That was part of our work. Second, once we estimated taxes by the industry, we then did that benchmarking comparison. So as I mentioned, we take tax contributions and we divided it by gross value added. We also looked at some other denominators just to sort of put that in context and then to allow us to do some comparisons with the Oregon agriculture industry and the manufacturing industry. So we did the same exercise for those two sectors of the Oregon economy. And then third, we forecasted forest industry taxes. So one of the questions that we had was, as the paid family medical leave tax are phased in, what does that do to the industry? Also, because of the current COVID pandemic, what is that doing to the industry? We looked at, in a couple different ways, what is likely to happen to tax collections by this industry. So first, we looked at state forecasts of taxes. So this is not particular to the forest industry, but we looked at a bunch of their forecasts, which also includes timber harvest and some other things, to say, what are they predicting is going to happen in terms of tax collections in fiscal year 21, 22, 23. So we looked at that. And second, we then took a short survey of OFIC's members to sort of gauge, what's happening with their business. So using that information, we forecasted some of the industry's taxes for the next few years. And I'll go over that finding in a little bit. Okay. So now that you have hopefully a little bit of an understanding of, what we found, how we did our work, I'm going to go into some of the more detailed findings of our work. So this first slide shows our estimates of Oregon forestry industry taxes in fiscal year 19, and this does not include the corporate activity tax or the paid family medical leave payroll tax. So unlike the executive summary slide, which has those taxes in it, this slide does not. So the Oregon's forest industry taxes are estimated at $113 million in fiscal year 19. And then in addition to that, we estimated that private landowners provided $29 million in fire funding. And you can see in this table, we break out the forestry and logging component and the wood products manufacturing component so that you can get the total, this last bar on the right, the total Oregon forest industry contributions. I think the only other thing I think is important to note here is that when we do our work, we are always trying to start with available data, available information. And when we don't have information on a component of the industry, we sort of footnote that. And rather than try to estimate something that we really have no basis for, we leave it out. And we note that our findings are probably a little more conservative than they otherwise they are in reality. And so one thing here, we have a couple of footnotes, but I do want to note that the individual income tax, we have some estimates here, but that's really only the pass-through business portion of it. Timber sales reported as a non-business capital asset. We didn't have any available data to sort of estimate that portion of it. And so I just want to note that this individual income tax is probably underestimating contributions by the industry. But again, we don't want to sort of make anything that's speculative. We want to always say, here are the things that we can estimate, here are the things that we can't. So taking that prior analysis, that fiscal year 19 analysis that I just showed you, and putting that into context of, what does that tax burden on the industry look like compared to agriculture sector as a whole, manufacturing sector as a whole, and you can see that the tax burden as a percentage of the industry's economic activity or gross value added without the fire assessment, that was 4.8%. With fire assessments added in, that's 6% for the forest industry. And you can see here this blue bar, this sort of darker teal bar. These are the agriculture and manufacturing sectors, and then the entire Oregon business sector. And this is a different chart than the executive summary, just as I noted, because this doesn't include the corporate activity tax or the paid family medical leave taxes, which were not into effect in fiscal year 19. All right, so that was sort of the first detailed finding. This is the second detailed finding that I want to share with you, which is including the corporate activity tax and the paid family medical leave payroll tax, and layering in those two taxes on a full year, on those fiscal year 19 financials, what does that do to the industry's tax burden? And so this is the more detailed table that supports what I showed you in the executive summary. So again, we start off with the taxes that were in effect in fiscal year 19. So property taxes, the forest products harvest tax, the small tract forest land tax, income taxes, and then we add in the corporate activity tax and the paid family medical leave payroll tax. And we do that again for the two different components of the forest industry. So we have the wood products manufacturing and the forestry and logging, and that's what makes up this first column, the Oregon forest industry. And you can see the percentages that I showed you on the previous slide, that 4.8% effective tax rate without the fire assessments and the 6% with. And then once you add in the corporate activity tax and the paid family medical leave payroll tax, then you're getting 5.6% and 6.8% in terms of tax burden. So you can see how that changed. And then again, we do the same comparison for the Oregon agricultural industry and the manufacturing industry. And you can see that their effective tax rates at 4.5%, 3.7% are much lower. And I do want to note that because the Oregon agricultural industry includes the forest industry in it, we do see then obviously an impact of the fire assessments in that sector, whereas the manufacturing sector, we do not. Just noting that. And then finally, we did do that comparison of, well, what are the taxes on a per acre basis? And so looking at that 162 million in terms of contributions with the CAT and the paid family medical leave payroll tax, that works out to $15.91 per acre of private forest land. All right. So the third finding I want to share with you, detailed finding I want to share with you is our forest industry tax forecast. So as I noted earlier, we looked at fiscal year 2019 because for a lot of our data sources, that's the most recent year. So we could tie everything back to fiscal year 2019. We then used the survey and some of the forecasts and data from the state to do some projections of taxes by category. Now, the state, and particularly when we were doing our work back in December and using their December forecast, they were forecasting pretty significant declines in income taxes. Based on the survey of members, we could see what was happening in terms of reported sales and revenue. That's not the same as what is going to be paid in terms of an income tax, but we didn't think we should be incorporating some of those sort of large decreases in taxes into the forest industry forecasts. The sector is performing a little differently than the economy as a whole. And so for some of these taxes, we then, for example, the corporate income tax or the individual income tax, we just left it flat. So rather than decreasing it, we said, we're not going to include that decrease. We're going to keep it steady for the next few years based on that membership survey information. For property taxes, there are limitations on how fast the assessed values can grow. There's all sorts of tax rate limitations and things. So we did have information for fiscal year 2020. We did very sort of modest growth rates for property taxes, for example. So, we looked at these by tax categories. We took into account the state data and the members survey information. And we also then took into account how the CAT and the paid family medical leave taxes are going to be phased in. So this is what this sort of analysis does, where because the CAT started in January of 2020, we have half of a year, calendar year in fiscal year 2020, and the same for the paid family medical leave payroll tax, where when it starts in 2022, it would be a half year in the fiscal year 2022. And so you can see here at the bottom, we sort of have that tax burden measure on the industry ramping up from 5.3% of gross value added to 5.7%. And then once we sort of add in the full year and what I showed you earlier, that's where you get to that 5.8%. All right, so I'm going to conclude my presentation with just noting some of the limitations for our study. You know, as I've mentioned several times, our analysis relies on publicly available data that's published by government agencies and other third parties. So we had to use fiscal year 2019 for much of our work. We did consult other years when they were available, but there is a lag in data. And so that's kind of why we have to go back and pick a year, that's not the most recent. So that's one limitation. Second, state tax revenue data some of it is published at an industry level, but not all of it. So we did have to apportion some of the tax amounts, say from the entire agricultural sector to just the forestry components. And so we detail in our report the ways that we did that and the ways that we've done this in the past for other clients. So we use sort of the same methodology, but we do have to do that estimation work. And we strive to use the most recent, the best available data for each of those apportionment exercises. Third, we looked at the state reports of assessed forest land to estimate the real property taxes. We did not estimate any personal property taxes or non-forest land property taxes paid by landowners, say on their structures or personal property. We would expect very few structures for the real property taxes on forest land, but I just want to note that we didn't do that estimation in this analysis. Fourth, the corporate activity tax is a new tax, and there weren't any industry level collection data reports from the state for the corporate activity tax. So we relied on our in-plan economic data set that allowed us to estimate Oregon in-state sales that would be subject to the CATs. We just sort of note that if Oregon source sales are different in current years compared to past years, that could change. The corporate activity tax collections would look different for the industry. So just noting that we did have to rely on our in-plan data because there was not publicly state data on that tax. And then finally, I do just want to highlight that, while we presented taxes in the context of, what is taxes divided by their economic activity or gross value added, there are other ways to calculate tax burdens. And we do that regularly as well. We look at taxes as a share of personal income or as a share of industry output or sales. So there are other measures that we could use. We just picked gross value added since it's sort of I would say the standard, and it allowed us to do the comparisons that we wanted to make, the benchmarking of other industries. And so we chose that for our analysis here. So with that, I'm going to conclude my presentation, and I am happy to answer questions.
Carolyn, thank you very much. That was a terrific presentation. We have the chat available for people that want to ask specific questions. I know we did get one that was asking about providing copies of the PowerPoint, which I'm sure we'll be able to provide, I believe. Is that correct? You'll be able to provide your slides? Okay. And we'll distribute that. Yes?
Yes, I believe that the OFIC is going to make this available.
Great. Thank you. So we'll distribute that probably through the chamber staff, and people that have registered are going to be able to access that. A couple of questions that I have, and then we'll go to the Q&A from the chat. Some of the state's biggest private forest land owners are structured REITs or timber investment management organizations. Is tax collected by the state on the revenues of these companies? And if so, where would that be captured on the slide that outlined the aggregate amount of tax paid by the sector?
Mm-hmm. Yeah, that's a good question. So REITs have certain tax advantages that I'm sure a lot of the participants here today understand. But REITs have certain tax advantages. They don't pay the corporate income tax in most cases. I'm generalizing here, but in general, they don't pay the corporate activity tax. I'm sorry, they don't pay corporate income taxes. So, but REITs, the revenue that they receive from timber sales or other things would be taxed by the corporate activity tax. So that revenue would be subject to the corporate activity tax. Severance taxes would be paid on harvested timber, and the distributed earnings from the REIT would then be taxed through the individual income tax. So most of the tax categories that I showed on my slides, REITs are paying those taxes. You know, the one difference that I don't think sometimes people don't understand is just that the income is going to be taxed through the individual income tax, not the corporate income tax. And that's really the main difference.
Okay. I have one other that I'd like to ask too. Okay, so this was based upon 2019 figures. In addition to the 3-year projection looking forward, did you look backward to see whether 2019 was in some way idiosyncratic?
Mm-hmm. Yeah, that's a good question. So, you know, as part of our work, we weren't doing, you know, a historical look, or we weren't trying to do a time series analysis. But whenever we were pulling our 2019 data and looking at the state reports, we pulled, you know, 2 to 3 years around it to say, you know, did this, to your point, is this anomalous? Did this look weird? Was something happening? For a lot of our taxes, like the property tax, those aren't going to fluctuate very much year to year. So yes, for individual taxpayers, but in general, because of the various limitations and things, we don't see, you know, a lot of changes. So when data was available, say for 2020, we looked at it to see if 2019 made sense in that context. And then we would look back at 2017, 2018 for a lot of our categories, just to give us confidence that, you know, there was nothing sort of strange about 2019. So we did do that check. We didn't do, say, you know, 10-year look at the industry. That was sort of outside of the scope.
Okay. And let's just say I'm going to go ask just everybody on board here if you would use the Q&A function rather than the chat to ask your questions. Please direct them there. Let's see. The question came up, I think, from a couple of sources, whether this study included transportation relating to the forest industry and capture of registration fees, fuel, and weight mile taxes.
Yeah, that's a good question. So we were primarily charged with looking at state taxes plus the local property tax. So for specific excise taxes, we didn't go into that minutia, nor did we go into what is, you know, every local, you know, really particular local taxes. For the work that I did in the fall for OBI, you know, we looked at, say, Portland area taxes, and we got into some of that minutia. But for this study, it's a really good question. It was more the state level tax and layering in then the just the local property taxes.
Great. Let's see. How were you able to get? Let's see, where did that go? Oh, just a question. There's no current severance tax that REITs are paying, so current severance is only a small tract program, correct?
So we have the forest land products harvest tax, and then we have the small tract forest land severance tax. So maybe that was that confusion. I sort of was using it as a,
Okay.
I should say harvest tax and severance tax there. That's what I meant by that. That's correct. So there's those two different taxes are different, and we included both of them. And so to the point about the REITs, the forest products harvest tax is what I should have clearly stated.
Okay. Do you have a way to estimate fees paid by the forest products industry beyond taxes?
So for some of the other work that we've done, we have gone into getting into those detailed licenses, you know, license payments or fees and other things. For this, we didn't go that level of detail. So I would say I would have to, really varies sector by sector. We do have strategies that we've used for other clients. So that was, that could be follow-on work. But there was nothing that we did particularly for this project.
Okay. Did the property taxes that you evaluated on the manufacturing side include business property taxes as well?
So we looked at both the real and the personal property tax for manufacturing. So the business personal property we included for the wood products manufacturing sector. We did that estimation. Mm-hmm.
Okay. Let's see. Can you tell whether the comparisons to things other than GDP yield the same comparison to all agriculture or all manufacturing and so on?
That's a good question. Off the top of my head, I can't comment on that. I would have to go and look at the, because we did do the analysis for the industry output. But I would have to go back and look and see exactly if there were any differences. There can be differences because output sales look different than gross value added, which does not include purchases by intermediate suppliers. So you could have differences in those two measures. So I would have to say that at the top of my head, I can't comment, unfortunately.
Okay. I'm not going to put you on the spot there.
Yeah.
Let's see. So one question, I think this may be a bit of a follow-up to something previously, but how were you able to get data on corporate income tax and personal income tax?
Yeah. So for the corporate income tax, we use data from the Oregon Department of Revenue, their report at the industry level. So we had that for at the 2-digit level. So for the entire agricultural industry in Oregon and for the entire manufacturing sector. So we did have a starting point. So then to use that information reported and then apportion it out into the different components of ag and manufacturing to get down to what we needed for our analysis, we used IRS statistics of income detailed data. So we looked at sort of what is the tax share of forestry at the national level, and then we rebalanced it to match the Oregon economy. And so we sort of used some of that information to say, we know what the state's reporting for all of agriculture. We have some information of, what share is forestry of all of ag at the national level. Let's rebalance it for the Oregon economy and then use that ratio to portion out what, that entire ag corporate income tax payment is for just the forestry logging sector. So we did that activity both for the forestry logging component and for the wood products manufacturing component. For the individual income taxes on pass-through, we also started with data reported by the state on pass-through revenue, different types of taxpayers. And then we did the same kind of activity using IRS SOI data to sort of break down, well, what are the various taxpayers in some of the different more detailed industries, and then applying that, we had to use that national data and then applying it to the Oregon economy as well. So often starting with a higher number and then using some other sources to help us then break that into the individual components that we needed for our analysis.
Okay. Another question, forest landowners appear to carry a heavier burden than other industries in the present tax structure. How much higher as a percentage of gross production will the legislature's tax proposals push the burden?
I don't know the answer to that question. So we have not been asked to analyze the proposals being discussed. So I unfortunately can't comment on that because I haven't been asked to do that work.
Okay. Does this study include other forest contracted entities other than logging, such as reforestation, road building, trucking, and so on, that are specific to the forest sector?
Yeah, so everything that's part of NAICS 113, which includes, trying to remember exactly all the subsectors that are there. Let me just pull up my notes for 1 second. So the NAICS 113 includes, most of the businesses that are growing and harvesting timber, sort of on a long production cycle, or anything that would be not, let's say, a contractor doing trucking or transportation, that would probably be categorized in a different NAICS industry and wouldn't be captured if they're not, say, vertically integrated. So there's probably some of that activity that we are not capturing here when we focused on, well, what is the primary activity of the business? And that's how those statistics are sort of calculated and rolled up. So there could be those, that transportation piece, that there's other jobs or things associated with it that we're not capturing.
Did you include slash burning registration fees?
I don't, slash burning registration fees. I don't think so. I don't, so I would say probably not, but I'm not sure.
Maybe that goes back to the question about
Category.
fees in which you were able to capture and include, right?
Yeah.
Yeah.
There are sort of minutia, because we're always starting with tax data that's been collected and then recorded in sort of state tax categories. We didn't have any of the excise or fee tax categories, so I don't think that would be included. We, of course, then pulled separate data related to all of the fire assessments and such. So we did, supplement that analysis, but I don't, if it's a registration fee, I don't think it's included.
Well, and given that you you use gross value added as your metric, are there other metrics that you contemplated or could have used instead?
Yeah, we could have looked at industry sales, and we could have looked at, often taxes are put in context of personal income. So income of residents, that would be both, that's sort of a different way. Pretty much for business burden studies, you're either using gross value added or you're using gross operating surplus. We did calculate it because of this industry, and the acreage was interesting. So we did calculate that metric and put in. So those are kind of, some of the ways that you could do it. And then in our report, we focused on 2 of them we thought made the most sense.
Well, it probably makes it hard to get an apples to apples comparison when you start using, a different kind of measurements that may be particular to a different industry, right?
It does, and that is obviously why we're always thinking about, well, what is the right denominator, and sales are kind of an interesting one too, because do you use sort of all sales for the industry? Do you put it in the context of in-state source sales? What is what is the right measure there? So we focused on sort of, well, what is the economic activity within Oregon, and then putting kind of our tax estimated tax contributions sort of in that context.
Okay.
Mm-hmm.
Let's see. Question about harvest sales from federal lands that are shared with the state. Were these receipts included in the total tax burden?
That's a really good question. So we are doing some follow-up work looking more specifically at public contributions. So federal contributions currently are not part of this analysis, although we are looking at what were those payments and sort of from the federal government, and trying to track to exactly what's going to local government. So we are looking at that, but it's not part of this currently.
Okay, I don't have any other open questions in the Q&A. If anybody has any you'd like to pose, please do so. I do have one for you though, if you would, Caroline. It's just, maybe this would be on the scope of your study, but I'm going to ask it anyway. How does the Oregon industry effective tax rates compare with other states? I don't know if you've maybe gleaned that from other work that you've done.
Yeah, so we've done a bunch of work at the state level looking at all Oregon businesses, and we've looked at those effective tax rates across states. And looking at fiscal year 18-19, Oregon's effective tax rates are lower than other states, but that's changing. That's part of the work we did for OBI, which because of the CAT, because of the paid family medical leave tax coming in, Oregon's going to look like it's going to be one of the higher tax states on the West. When we did some comparisons there, and it's going to be above the average once those taxes are in effect. So that's looking at all businesses. When we didn't look specifically at the forest sector to other states, so I'm not going to comment there, but just the overall Oregon tax environment, like I said, we've done for the last 20 years looking at Oregon's effective tax rate compared to other states, and it's always been pretty low and below average, and most of that's driven by the lack of a sales tax. But with the addition of the 2 new taxes, that's definitely changing in the next few years.
Mm-hmm. Okay, we've got a couple other questions that came up. First, of the REIT and TMO individual income taxes, how much goes to the state and how much lands out of state?
I don't know, actually.
Okay.
Don't have good data that allows for, we could look at 10Ks and get some indication, but we were kind of initially hoping to do some more of that analysis around, what exactly were taxes around REITs and thinking about those structures. We didn't have a way though to do that analysis. So unfortunately I can't answer that.
Further work on the leakage question then, right? Okay.
Yeah.
What would you say are the biggest limitations in terms of the data that you relied on to complete the analysis?
Yeah, so I think some of the limitations are that, most of the data is a couple of years old. That's the best data, or at the industry level. So often we could get data for an entire tax category, but if we wanted the industry level, so looking just at forestry, that information, or just looking at agriculture in Oregon, that information, you had to go back a couple of years. So that's one limitation. I think the second limitation is that even when you do have industry data, a lot of it's not at the detailed level that we needed. And so we had to do quite a bit of apportionment of those tax categories into the sectors that we were looking at for the forest industry. So I think that's the second limitation. And then third, for some of the taxes like the CAT, which is a new tax, there's not government data, by industry on that tax. And so we were using, very, data we use all the time, which is our in-plan data to sort of think through, well, what are in-state sales by the industry that would be subject to the CAT. But again, we had to use sort of in-plan data, whereas we would prefer to be, tying it to a state report or that sort of publication. So that's, I think, another kind of limitation. And then third, as I mentioned, I think when I was going through the presentation, there are some of the individual income taxes, if it's not being reported as sort of pass-through business income, we had no way of estimating sort of what is the income from, non-business timber sales that are being reported, how, what was the tax paid on that portion. We couldn't estimate that either. So I think we're missing a little bit of some of that income tax contribution from the industry.
Okay. A question came through, what are, quote, in-plan data?
Yeah, so in-plan is an input-out modeling system. And so in-plan is the name of the company, and they are sort of the standard, the gold standard for how economists do economic impact modeling. So that's what we use. Now, in-plan takes BEA data, BLS data, so takes Bureau of Economic Analysis data, basically data from a bunch of government sources, and it estimates all of the sales, employment, wages for the different sectors of the economy, and it maps to the relationships between those economies. So you understand, here's what is, when I was talking about sort of sales by the industry to clients in Oregon, InPlan is using data on the industry to estimate that for us. So InPlan is using government data as the short answer, and it just puts it in a very nice package that helps us see all the relationships between different sectors of the economy in Oregon.
Okay. And we have one last question, I think, that came in, and then we've got a couple of closing remarks, but and announcements to make. But this came in and it asked why include the paid family leave since the analysis didn't include unemployment tax or healthcare related taxes or assessments. So if you could answer that.
Sure. So when we were looking at sort of, well, what are tax categories to include, looking at taxes on sales and income and wages, although the unemployment tax is on wages, the payroll tax being a pretty significant tax. And there's sort of, payroll taxes, I think, when we do our state by state look, there's quite a few states too that are levying payroll taxes now to fund PFML programs and others. For that comparison aspect of it too, particularly when we were doing our OBI work in the fall, we decided to look at, include the paid family medical leave tax. Just being such a significant tax. You're right, the unemployment tax, we've done those analyses and we often include the unemployment tax contributions by employers. And for example, in our cost reports, that is one of the categories. So we could level it. It's usually reported a little bit separately from the tax categories, if that makes sense. Although for our cost report, we layer that in. So it's a good question. It's something we could definitely put in. And we do regularly look at that tax. I think the significant nature of the paid family medical leave tax and the fact that other states are also starting these programs, are doing it through the payroll tax. When we were looking at this in the fall for OBI, we wanted to make sure we could do that kind of comparison. And so it was on our radar and part of our approach here.
Well, Caroline, thank you so much for the great presentation and for indulging us in a whole series of questions. I think this is terrific information for us to take away and informs us going forward about the potential impacts on this particular industry and others of these tax measures. And a couple of closing announcements, and then I'm going to turn it over to Vani to wrap things up. We do have another presentation coming up on the 20th at noon with our Springfield School District Board Candidates Forum. That's going to be co-hosted by the Chamber and the Springfield Realtors Board. So mark that on your calendars. And then we also have today at noon, the Economic Development Committee for the Springfield Chamber will meet. Courtney Griesel from the City of Springfield will be our speaker and provide a summary of the Glenwood Riverfront development presentations that were given to CEDA, the Springfield Economic Development Agency, last night. So thank you very much, Caroline and Vani, if you'd like to take us home.
Boy, I wish I could. Oh, I am home. Well, I wish I could take. Thank you so much, Caroline. I can't thank you enough. For my understanding is an unprecedented study, and for you taking the time to be here with us and helping us understand what the study presented and the results, and also help us get a kind of a baseline for going forward. We have a lot of important issues before us in the state legislature that we're keeping a close eye on. So once again, thank you everyone for joining us. We really appreciate it. Springfield Chamber is here for you. you know who to reach out to in your own communities. If not Springfield, Eugene, we've got great chambers all across the state working on your behalf. And of course, Oregon Forest and Industry Council too. We appreciate the informative work that they do. And Phil, can't thank you enough. I guess we'll see you at noon, Phil. Thank you again, everyone. And again, the recording will be provided. We'll shoot an email out to all registered participants for this morning. So look for that later this morning. Thank you and have a wonderful day.